Hello traders, in this video we're going to go over some rules for day trading. Why do you need rules for day trading? Because we are emotional beings and we cannot trust ourselves once we're in the trade. So you have to have rules, you have to have a plan, you have to read them every single day so that they are ingrained in your mind, and that way when you're in the trade, when you get that sensation or feeling of, oh, let me try this, let me try that, you stop yourself before you even make that poor impulsive decision. So that's what trading rules are all about. That's what a trading plan is all about. And this is the only way that you can be profitable in the markets in the long run. So let's take a look at these rules. So global rules for day trading, that means that they should apply to just about every single day trader. The plan specific rules will be more geared to my trading plan, and if they don't fit your trading plan, you might get inspired as to how to write some rules for your trading plan. Now, if you want to download this document, it is available on my Patreon page. That's patreon.com/tradingarmor. It's available at the first tier level, so you get access to my 2-hour calculators and these day trading rules. So let's go through each one of these. Always respect your trading account. If you've been trading any length of time, you've probably had at least one, if not many instances where you didn't have anything else going on and you said, you know what, the market is open. Let me open up my brokerage account. Let me see if I can find something, because, hey, especially when you're new, trading is kind of fun. It's exciting. But this is not a good thing to do, because that is an impulsive decision. And what happens when you make one impulsive decision? You're likely to make more. Your defenses are down. Your discipline is low. You're ready to just take any trade. And if the trade fails, you're more likely to continue to trade and try to get back that money. And usually what happens is you just increase your losses. And that's a great way to blow up your account, especially if you do that regularly. So that's what rule number 1 is all about. That's extremely important. That's why it's number 1. And just down here, while your money is in the market is the risk. That we all understand, because your money is in a stock or an option or whatever, and as the price of that stock fluctuates, your money is obviously at risk. But whenever your money is just sitting in your trading account idle, you are the risk for that money, because that means that at any time you can log into your account and do something stupid. So that's why this rule is here, to tell you, to remind you never to just open up your account and start taking random trades. It should always be scheduled. For me, I only trade between 9:30 a.m. and 10:30 a.m. right now. And when that time period is up, I do not look for any trades no matter what. I don't care what anyone says about some stock popping off, going to the moon. It doesn't matter to me, because I know if I just open up my account randomly that anything can happen. So it's just not a good habit to get into. So number 2, this used to be my rule number 1, never average down, except never ever average down. So this is just because this is such an important rule. My example is early in my trading career, I had a 13-day green streak. That sounds really wonderful. It's not. The reason why I had a 13-day green streak was because I was in losing trades and I kept averaging down, and they kept turning around, reversing, and encouraging my bad behavior. Well, what happened on the 14th day? It never turned around. I kept averaging down until I was basically out of money. All of my money was in this trade. And I ended up holding this stock over the weekend, and then realizing how stupid my behavior was, and I got out as soon as I could Monday morning. That trade was on a Friday. So at least I came to my senses, over the weekend. But that was such a dumb thing to do, and it was my biggest loss of my career. Not a big loss overall, because I was trading with small amounts, as a newer trader should. But still, it was just a stupid thing to do, and it was a great lesson to never average down. And pretty much every professional trader follows this rule. There are a lot of YouTube traders that don't. You'll see a lot of them averaging down, and it's just not a good idea. You're throwing money at a bad trade instead of just admitting, hey, this stock didn't do what I thought it would do, so let me just get out. That's what you should do, is stop out. So number 3, always read your trading plan and rules every day before trading. The thing with that is, you may think you know your plan inside out, you may know your strategy, but I guarantee you that days will go by, something will happen in the market that you haven't seen in a while, and then you're like a deer in the headlights and you're not sure what to do. And then you look back and you go, oh man, my plan said I should have done this and I didn't. I forgot about it and now I lost more money than I needed to. So that's why you need to always read your trading plan and rules every day, as well as to help improve your discipline. If you have this stuff right at the front of your mind when you're in your trade, then it will protect you when there is that tendency to maybe make a stupid decision or an emotional decision about the trade. You'll say, you know what, this is what my rules say, this is what my plan says, and I'm just going to do that. And that's what you should be doing all the time. Number 4, always know your stop before entering a trade. We kind of touched on that in rule number 2. The stop tells you where the trade has failed, and that's something you need to be able to decide based on your strategy. You need to be able to look at a chart, look at the price action, look at the candlesticks and say, if the price comes down to this level, the trade has failed and I don't want anything to do with it. And that's where you place your stop. And if your stop gets hit, so be it, and you move on to the next one. Now, there's a quote here. Fear of using hard stops is due to not properly testing and proving your trading plan. So what do I mean by that? So I often see this in YouTube comments all the time. I hate hard stops. There's people that are just hunting my hard stop or whatever. That's not true. The thing is if you are afraid of your hard stop, it's only because you have not tested your trading plan. You've not tracked your trades. If you have a working trading system and you've tracked it for 100 trades and you've proven it profitable, even with hard stops, then why would you be afraid of using a hard stop? You wouldn't. So that's my argument there. And then number 5, your profit target is always 2 times the difference. So this is a plan specific rule. This is because I use all or nothing 2R risk management. So that means that my profit target is always 2 times my risk. And that way, 1 winner will cancel out 2 losers. It's just a good place to start. I'm also tracking 3R, all or nothing, and I will be tracking more in the future. So for now, we're doing 2R, and that means that our break-even win rate is only 33%. So if we even have a 40% win rate, we will be extremely profitable with the trading plan that I'm testing right now. So that's what that's about. Again, that will be unique to your trading plan and your trading style. This is one of the quotes that I hate the most. No one ever went broke taking profits. So this kind of goes back to the averaging down and that 13-day green streak. I mean, I was taking profits left and right, and so much so that I had 13 green days in a row, but the profits were tiny compared to the loss that I took the following day. And that's the problem with scaling out too early and taking profits when you're only maybe up a fraction of your risk or just maybe 1 times your risk or something like that. Because when the stock goes against you, you're going to hold to your stop, or even worse, you're going to hold a bag. And that is a loss even if you haven't taken it, because it's going to lead to future losses, because eventually that is going to bite you big time, even if you get lucky and one of the bags you holds reverses and comes back around eventually. Not a good way to trade. Number 6, stick to your plan and your pattern. So this is just all about discipline. This should be kind of a no-brainer if you are serious about day trading or trading in general, is you should have a plan going into every single trade and stick to it no matter what, and only trade the stocks and the setups that fit your plan 100%. Otherwise, you're just gambling. And any statistics that you track that are trades that you've taken outside of your plan would be meaningless. So it's really just, if you're doing something like that, if you're taking trades that are outside of your plan, you're not looking to the future. You're not saying, okay, how is this going to affect my trading down the road? You're just thinking about the trade you're in right now. And no trader has ever made a trading career out of one single trade. So keep all of that in mind. Number 7, only trade 1 ticker per day. Now, this is based off of statistics that I've collected myself, where I know right now, for example, the trading plan that I'm trading, my first trade is about break even on the ticker symbol, and then the second trade on that same ticker symbol wins about 50% of the time, and the third trade wins over 60% of the time. So this is an interesting thing, because I just know based on my statistics, not based on what someone else said or what I've read in a book, that if I just stick to one ticker symbol, that I have much higher likelihood of ending up green on the day instead of jumping around from one ticker symbol to the next looking for that great trade. So that, again, is a plan-specific rule, but it's based on actual statistics, and that's something that you need to track yourself and find out where the statistics fall for you. So number 8, always stop trading after your first winning 2R trade. Now, this is something that's like a psychological rule that I really prefer to do. I've done all kinds of stuff in the past, but what always bothered me is if I had a winning trade or 2 winning trades and then I continued to take trades and eventually gave all of that profit back. That was a real bummer, and I'm sure it is to everyone. And what that ends up leading to is revenge trading, and you go into the next trading day and you think, okay, I need to get that back and I need to be profitable. You start making really bad choices. So whatever your profit target is for the day, you should really stop there and just wait for the next day to start trading again, and just feel good that you had control, self-control, to stop yourself from continuing trading for the rest of the day. So number 9, always stop trading after 3 losing trades. This is kind of like my max loss, and this may be different for you, but this, if you're not sure when to stop, this is a good place to start, is 3 losing trades. So this will avoid catastrophic losses. With my 2R risk management, it only takes me 1.5 2R trades to undo a worst case scenario, which would mean that I lost 3 trades in a row. Or if I hold till 3R, which I'm also tracking right now, 1 winning trade will knock out a worst case scenario day. So that is just a nice thing to know, that, hey, even if I have a terrible trading day, that the maximum that I can lose is 3R. So number 10, track every single trade. This is extremely important. If you watch my videos, you know I have detailed spreadsheets where I track all kinds of data, not just your P&L. Tracking your P&L alone is absolutely useless. Again, I can go back to that 13-day green streak where if you looked at that on a spreadsheet, you'd say, wow, this is great. This guy's a great trader. Then on day 14, I lost it all. Why? Because I was just tracking P&L and I wasn't paying attention to how much I was winning versus how much I was risking, that kind of a thing. So that's what number 10 is about. 11, if you ever intentionally break any one of these rules or any part of your trading plan, you need to stop trading immediately and for an extended period of time. I did this back in August. I was on a really nice streak where I think I went 50-something trades without breaking my plan. And then I had a weak moment one day and broke my plan only by 2 trades. So it wasn't like, I went crazy and just flew off the handle. I was supposed to stop trading after 3 trades. I took 5 trades that day. But it doesn't matter how much you break your plan by, or, they're all equally bad offenses, because if I broke my plan by 2 trades that day, what's to say that I don't take 50 trades the next day, go through all of my account in one day. So that's why if you do intentionally break any one of these rules or your plan, you should take an extended period of time off from trading. For me, that's 1 week. 1 day is not enough because you're still going to be feeling the emotions from you breaking your plan and the losses that you took from breaking your plan, and you're more likely to continue to break it if you come right back to trading. So 1 week, and use that time for reflection and think about what happened and how you can avoid it in the future. Work on your plan and your rules so that you can keep yourself from doing that again. If your rules are written well enough and your plan is written well enough, it'll be that much harder to break them. So number 12, never forget your role as a trader. We're here just to execute our trading plan. That's it. And you can't, no, there's no perfect trader. That definitely that no one exists out there that's a perfect trader. No matter how profitable they are, they make mistakes. But what you can aspire to is to trade your plan perfectly. So if you write your plan in such a way that it's very easy to follow, it's very well defined, and you focus on just trading your plan, you can trade your plan perfectly, and your plan will always be better than you are in the moment of a trade, especially a weak moment. So that's number 12. And again, this is a really interesting thing right here. All of the thinking should be done during the trading development phase. So that means that while you're trading, you're not thinking, you're just executing your plan. The thinking part is done during writing the plan. So again, that keeps you from trading emotionally. And if you follow these rules, your capital will always be at the minimum risk as defined by your plan. You will avoid black swan events. If you're not sure what that is, it means that you take a really bad trade that puts you in really great risk and you hold for way too long and you end up taking a massive loss, and that basically can blow up your account. So if you have a good trading plan and you follow it 100% of the time, you'll have many red trades and many red days, but you will be green in the long run. You'll also feel satisfied that you're trading like a professional trader and not a gambler. So that's a really important point, because a lot of new traders think the trick to trading is to not have any red days or to have very few red days. And that really is not the way to go. Again, going back to my early trading, 13 green days in a row, I ended up red on the 14th day, wiping out all those gains, and I ended up red overall trading like that. So the goal is not to have as many green days in a row as you can. The goal is to have a plan that you've proven to be profitable in the long run, and then you just work on your discipline of executing that plan and your skill of executing that plan. That's it. As simple as that. All right, so hopefully this video was helpful to you. Sorry there was a lot of talking, but there was a lot to get through, and I really wanted to explain each and every one of these rules. If it was helpful, hit that like button. If you haven't done so already, hit subscribe. If you have any questions about this trading, these rules, or my trading plan, or anything else, just let me know in the comment section below and I'll get back to you. As always, go into every single trade with a plan. Stick to that plan no matter what. Always take your stop losses, honor your profit target, and in the long run, you should be green. Take care.